We'll start our lesson 2. Today lesson will go through our LO2 learning guide 2, and as you know, my name is Anjum Satar. If you have any questions, please drop me email anjum@ukversity.co.uk. Okay, let's begin. Okay, welcome, morning. Can you hear me?
Yeah, I'm hearing you.
Okay. How's weather you're in? Here in Manchester, in Leeds. In Leeds is nice sunny. What about your end? How's there?
It's here sunny too.
Sunny too. Okay, great. Good to hear. Okay. So last lesson we discussed about financial statements. We discuss about accounting, why we required. We discuss different types of accounting. And today lesson will go through LO2, which is about, we discuss management accounting is internal and financial accounting is external. We said accounting means recording the transaction in the book of accounts. We said, we need to be ethically, it needs to be true and fair. We discuss about no conflict of interest that shouldn't be happen. Today lesson will go through our LO2, which is learning outcome 2. Prepare basic financial statement for unincorporated business and the small business organization in according with accounting principle, conventions, and standards. Any question if you have before starting?
No.
Okay, let's start then. Understand the accounting regulatory framework, income statement preparation, understand the balance sheet, and that will be the key which we'll go through in a minute. Okay, so understand the accounting framework, which is quite crucial. We look around all the rules and the regulations which help you to prepare the financial statement under the framework. So financial statement preparing using the principle and the rules and the regulation providing guidance to ensure the rules are interpreted in the same way. Like when we say debit and credit, double entry bookkeeping, asset goes in the balance sheet, liability goes in the balance sheet, and equity, which is investment capital, goes in. So income statement, income and expense shows, yes, cash flow shows. So accounting rules and the legal system, code law system, accounting rules largely driven by tax law. Common law system, accounting regulation usually set by the professional organization. Standard setting bodies involve less, detailed regulations. We can look around the elements of regulatory framework, what those are the key points which, the local laws apply to the enterprise organization, local adopted accounting standard. We have UK standard, AR international. If we have a business throughout the world, we can follow international standard. Otherwise, we can follow the local standard because we are registered in the local stock exchange, such as London Stock Exchange. International body requirements that we follow the standard. We have an international accounting standard, like International Accounting Standard 1. We can call them in the nickname IAS1. IAS1 is it's how many statements we prepare, and statement need to be true and fair. So we'll discuss few standards. Locally developed international conceptual framework for accounting, local rules, which we can. We have a GAP. GAP is called General Acceptable Accounting Practices, Conventions, Rules, Procedures, necessary to define accepted accounting practices at the point in time. We can look around accounting guidance is the general application and also detailed practice of procedures. We can look around include the local legislation requirement and accounting standards. We can look around academic, which change over the reflecting the economic condition, and the standards carry on changing because the people carry on playing and doing some sort of not true and fair information. That's, we need to be making sure. We have an IFRS, International Financial Reporting Standard. IFRS. We have an International Foundation Reporting Standard. That's, the body. But then we have within that, we have International Financial Reporting Advisory Council. These are all the organizations those work toward the standard. International Standard Board, and then International Financial Reporting Interpretation Committee. They interpret the standard is fit for purpose, and then they set the standard. International Accounting Standard Board, the objective to develop a single set of high quality, understandable and enforceable global accounting standard to promote the use of and the rigorous application of these standards, to bring a convergence of national accounting standards and international accounting standards. Thus, look around and working together toward the true and fair. So way in which the international accounting or the financial reporting standard adopt in different country, adopting them at local, it can be gaps like a general acceptable accounting where accounting professional is not well developed, using them the model of the local gaps, local standard, amending them reflect the local needs and the conditions, and using them persuasive influence on the formulating the local gaps, and we can revise the standard. We can locally, because every country have own rules, regulation. So some local standard we can, but we can embed it with the international accounting standard because I'll give you an example in next few slides. So develop the local gap with the no reference to international financial reporting system, purely rely on the national standard. Adopting international standard 15 GS. GS20 is a great nation, those are industrial nations, of course, UK, 20 countries, India, and the rest of the world, it's like of, Germany, say, those are come G20. Yes, jurisdiction have adopted the international financial reporting standard. All the companies in the public capital market, of course, they have to remain in the G20 jurisdiction. Japan permitted IFRS standards on the voluntary basis. Domestic companies accounting 33% of the Tokyo Stock Exchange capitalization has adopted these standards. China, India, and Indonesia have adopted the national standard. They are substantially aligned with the international. Of course, they are the way do the business and do the reporting is matched with it. But have not announced the plan to be timetable for fully adoption. The US does not permit domestic security issuer to use international financial reporting standards. We have does permit foreign security issuer IFRS International Accounting Standard Board, and approximately 500 companies do so. Okay, then we have all the assessment criteria. 3.1 P3 1, understand the financial statements, which we look preparation of these statements. So published financial statement, statement of financial position, statement of comprehensive income, statement of change in equity, and statement. These are the 4 statements we publish in accounts. So the first is statement of comprehensive income. It shows income and profit, in loss, expenses, income and expense shows in that statement. Balance sheet, which is called financial position, shows asset, liabilities, and capital investment, or we call equity. Equity means shares capital. Change in equity, how much dividend we paid, how many shares we issued during the year. Cash flow, it shows how much money in and out from the business during period, and we can find notes where these came from, and comparative information need to be in. For purpose of financial statement, we can measure the past performance of the company. We predict the future performance, and it helps to measure the risk uncertainty about the cash flow, where the money will come from. If we have a short of the balance, what will be happen? So in the income statement, it shows total revenue. Revenue means total worth of the sales you have. How much cost you minus the cost is equal to profit. That's the simple formula. Then we pay the tax on it. And however, the simplest few income statement operating section, it can be sales revenue less cost of sales, other selling and distribution and admin expenses. Non-operating expenses can be gain and other expenses, like maybe your income coming from property business and all. We can include irregular, some businesses or some operation we can close, and some operation will carry on running, and we can do the tax effectively on these, and we can show like here is the income statement. Revenue, how much worth of the sale, how much is cost us to buy it, or if you manufacture yourself, how much is the gross profit, the difference between the sale price and the cost of the purchase minus it will be the gross profit. Then we do all other expense under distribution, admin, and we can say, how much is our profit before. Then we have a finance cost, is mean interest. If you borrow money, you have to pay to the bank, and profit before tax, and then you pay the tax, and how much money is left, how much money you distribute to our other asset, and how much is the total profit you have. That's, the business is showing full profit, and that's the balance sheet, sorry, income statement. Take income and expense figures in the trial balance. Look around the sale less if, and opening inventory, purchase less. These are the formulas we use. Opening inventory plus purchase is minus closing. We can find how much cost. Gross profit is mean sale revenue minus cost, and selling. And so trial balance way, we can, all the bookkeeping goes in the trial balance, and then we can follow these, so we can look around admin expenses, the per question depreciation and other allocated expenses. We can look around operating profit, is mean gross profit minus all your other expenses we can, and then we can look around finance costs, we can look around profit before tax, taxation, and the dividend if we have, the paid we can. Statement of comprehensive income, how we can structure, so we can put the format here, revenue, cost, is distribution and all expenses. Your minus you can find if you have a figure, so you can put in the same order, and we can calculate, and we can prepare the statement. Okay. Let's understand the statement of financial position. Financial position, also known as balance. Any question, please? Income statement, if you have.
No.
So then we have balance sheet, or we call statement financial position. It shows asset, it shows liability. It's a report, which is used to summarize the financial status or position of the business. We can look around asset. What is meant by asset? Anything you own, like jewelry is your asset, mobile phone is your asset, house is your asset, building is your asset, land is your asset, computer is your asset. Okay, liability, anything you owe it, which you have to pay, like a bank loan, like a mortgage, like a leases, like a bond. These can be your liability. Equity is mean share. It's mean investment in money or share. Maybe you have other company share, your own company share. That's your equity. That show them. Okay, so asset can be two types. Non-current asset, the asset which we can use many years, also known as fixed. It can be tangible. Tangible, anything you can see it, touch it, feel it. That's your asset. Building, plant, machinery. Intangible, you can't see it, but your asset, like a copyrights, like a trade, like a goodwill. These can be like a Nike sign, you've been authorized to manufacture on the behalf of them. That can be intangible. So current asset, the asset which carry on changing, like a cash position within 12 months, inventories and receivables, which we have to receive if you're selling things on credit. Non-current assets are required within the intention to control greater time, more than 12 months, like a property, plant, machinery. Current asset, which is expected to be used within 12 months, like a cash. These are short-term assets. And liability can be two types as well, equity plus liability. Liabilities mean anything you owe it. Current liability, which you have to pay within 12 months, like trade payable. If you buy the goods on the credit, that's you have to pay overdraft and the taxation. And non-current liability, the liability you have to, like a mortgage, like a lease, it takes more than a year to settle down. Then we have equity. Equity means shares, like share capital, like investment. That's which we can look around. Statement of financial position, liability, equity, non-current liability, obligation that deferred over the period of 12 months, long-term loans, deferred, and the taxation. We can look around current liabilities, current obligations that will be satisfied within 12 months, bank overdraft, the short-term loans. Statement of financial position, as we mentioned, shows asset, equities, and liabilities. So asset goes on the debit side, and the liability goes on the credit side, which we can look around. And that's the layout of statement of financial position, which is also known as balance sheet. So we can look around the non-current assets, which is long-term. Then you have a current asset. If you add them all together, that's your total asset of the company. Then we can look around the equity or liabilities of the company. That's my debit side, that's my credit side. It should be equal. You will see 2527, 2527. How much shares we issue, how much shares we issue, both above them their face values, how much profit we have previous year return earning, how much value of the asset went up, and then non-current liabilities, which we have to pay more than a year, how much we have the current liability, how much we have to pay within a year. We can add them all, and that's our figures asset equal to liability and plus equity. That's we call accounting equation. That's we have. So today lesson we discuss about the financial statement. So key statement we discuss, which is today is income statement as per the slide was provided, income statement and the balance sheet. So what shows in the balance sheet and what shows in the income statement? Income statement shows revenue, which is mean the worth of the sales. It shows the cost of sales and equal to gross profit. Gross profit is the difference between, then you minus all other admin and distribution, all other expense, you will get profit from operation, and then we can minus finance cost, we can say profit before tax, after tax. Okay, so if you want to look around the statement of any company of your choice, let's say you like Tesco. Tesco is one of the biggest supermarket here. We can find their financial statement and we can look around in that statement what's happening with the Tesco. So if we look there in that statement in the Tesco, you can find any company of your choice. Look there, we've been given the financial statement. If you go the group means they have many subsidiary companies like Tesco supermarket, Tesco bank, and all they do the combine their statements. And 120 page, I can type here 120. I can go on the 120 page because actual document the page number slightly different. 116, I'll go 120. This is 120 page number, and I'll see the income statement of 2 years of Tesco. What's happened there? Revenue. So you will see the revenue and the gross profit. So how much cost them? Yeah. So that's we can see is in 52 weeks in 2023, they have a total profit after all adjustment 3661 million. That's the gross profit, and the previous year was 4633 million. So it means their profit is dropped by more than 100 million. Yes, thousand. So we can look around these, and that's please we can look around. That's help to measure the performance. You can look around what is their profit for the year. They have 1634 million. Last year was 1693 million. So it means 60 around million is dropped our profit. How much dividend they paid, the shares. So we can see these all the facts and figures. Then we can go the balance sheet underneath. Yes, if you scroll down, that's the financial position. We can see the non-current asset, current liabilities, yes, and all equities. And thus we can compare equity statement, and then they have cash flow statement, how much money in and out under each, and what it was the balance, final balance of the cash. So at this level, at least, we should be aware of which statement, where the things are coming from, and what is the purpose. We can use these statements to make the decision that will help, to measure the performance of the stakeholders. Okay, any question, please? Okay, as we discuss all these financial statement to the lesson and key focus of income and balance sheet. Hello, are you there? Okay, guys, thanks for joining. If anyone any question, we can go through. Otherwise, we'll keep up to here. And the next lesson, we will go through our LO3. Hello. Sorry, I think so. You was off. Yes.
Yeah.
Cut off. Okay. So we look, the actual company Tesco's statements. Yes. So you can look around what's happened there, profit, what's happened there, income. Yes, that's given 176 page numbers. So if you scroll down, you can find all. Yes. So like you will see there what's happened, these companies' financial statements. Yeah. And their revenue, their income statement. So today lesson we discuss about income statement, which is also known as profit and loss. And we discuss about balance sheet, which shows asset, liabilities, and equities. That is quite good. That's quite good to be go through these statement in details. Huh? Okay. Yes, any question regarding these statements?
No questions.
Yes or no, please? Okay.
Right.
So if you
Didn't
look,
get
this week's slides go through, and the next lesson will go through LO3. Yeah?
okay, but didn't get the recording of LO1.
Or LO1. Just 1 minute. Okay, what I'll do, I'm going to send you straight after. Okay, because I think so that was generated late and I did not send you, which I'm going to send you now. Normally they post in the group, on Monday, but I'll send you now. Okay, I'll send you on the
Okay.
WhatsApp. You're on the WhatsApp group?
Yeah.
Okay, I will just share, in a minute. Huh?
Okay.
Thank you. Have a good weekend. Thank you. Bye-bye.
Thank you. Bye.
Bye.